Hello and thank you for taking the time to watch this video. In this video, I'll explain what is happening in the Forex market in respect to GBPUSD and show you why it may be a good time to trade and make a lot of profit with my analysis. We will proceed in a progressive manner, quickly going through the basics and bringing you up to speed. So please take your time to watch this video till the end and pause if you have to read the write-ups that will pop up. In this video, we'll be dealing with price action analysis. So what is price action? Price action is how price moves on a chart over time. Now, instead of using indicators like moving average, we'll be using candlestick patterns, support and resistance, and trend lines to make our trading decisions in this video. It is like reading the market story through price movements. Now, also, we want to know about time frames. Now, I want you to think of Forex time frames like a map, zooming in and zooming out of that map. Now, the bigger the time frame, the bigger the picture you see in the market, and the smaller the time frame, the more details that you will notice. And now, what is GBPUSD? Now, GBPUSD shows the exchange rate between British pound and the United States dollar. Now, in quotes, GBPUSD simply trading at 1.25 means that the British pound, one British pound is worth 1.25 US dollars, which is $1.25. Now, if this number goes up, it means that the British pound is getting stronger. And if it goes down, it means that the British pound is getting weaker. There are many things that can affect the GBP USD trading price, which are the economic news that happens in the market, the bank interest rates, and political events that happen all over the world. Now, these are the things that can affect the market. Okay, so now on the right hand side here, we can see the price starting here from 0.6 thousand moving up to 2.8 thousand for 80,000. Okay, so now this is where we have our time frame. Now we have the 3-monthly time frame, the monthly time frame, the weekly, daily, the hours, and then the minutes. Right now we are on the 3-monthly time frame. Remember, the larger the time frame, the more the picture you see. All right, so now we are going to break down this time frame as time goes on. Now we can see we are trading here on GBPUSD. Now, what else do you want to have in mind? When we are trading, we'll be looking at our trends. Now is the price action strategy. Okay, so our trends, we have the uptrend and the downtrend. Now, if it's in an uptrend, it tells you that the price is going up, and if it's in a downtrend, it tells you that price is going down. So the first thing we want to do is analyze and identify our trend in the market. Okay, so now we will draw our trend line from here straight all the way down. Okay, so now how did we make this a trend? Now we have a point connecting here, another point connecting here, another point connecting here. So where you have 1 or 2 or 3 points connecting at the same time, and you draw your line in whatever direction it's going, then you know that you have your trend. So right now we have this point, and this point, and then we can see that it's going in a downtrend. Okay, so now that we have identified that price is going in a downtrend in the market right now. Excuse me. Now, what else do we want to know? We want to know support and resistance. Okay, now support is a price level where the market tends to bounce up, and resistance is a price level where the market tends to drop down. Now, knowing our support and resistance level in the market is very key, because they tell us where the market is about to either break out or continue in a direction. All right, now we have a major support level here. Now we see that whenever price comes all the way down here, price came down here and then it went back up. So now where price drops to and returns to the upside, we call it support. Now we have identified our support level, and then we want to draw our resistance level in the market. Okay, we have so many resistance levels. In fact, we have so many levels here that we are just going to map them out. Okay, now we have a resistance level over here. We have another resistance level over here. Now we can stretch this out. Then we have another resistance level over here. So bear in mind that when price breaks a certain level, right? Let's say, for example, if price should break below, instead of going back up, if price should have broken below the support level here, then this will become a new resistance while price will continue to trade below it. Okay, but we didn't have that in this instance. So we can see that we have a reversal happening right now. And then at this point, when price came to the support level, it had a reversal and then it went all the way up. Okay, so now this is where we are trading currently. We want to put our levels here so that we know what we are dealing with. So now we have resistance here, another resistance level over here, another resistance level over here. So now that we can see the price is respecting the support level, it's not breaking below it, instead it's returning, it's having a reversal, right? Now we can expect that price will continue to buy all the way up to here before a reversal happens. Okay, we have another level here. We can't ignore any kind of level that we have in the market. We can't ignore it. Okay, now so we have a resistance level here. Okay, so now that we have mapped out our resistance and support levels, we also want to look at this. We have a trend also going on here, and when we connect this, what we have here is a falling wedge pattern. Now, what is a falling wedge pattern? A falling wedge pattern tells us that when price breaks above a resistance trend line in a situation like this, then price will continue to trade on the upside. That means price will continue to go up for a while. Okay, and now there we have that signal over here. Now we have the breakout happening over here in a falling wedge, and then now we can tell that price will continue to go up. Right, that means the price in GBPUSD is about to go up, which tells us that we want to go for a long position. So if you are trading now, you want to buy. Okay, now we are going to go to a smaller time frame. Let's do a week so that we can see what is happening here. Now we have mapped out our resistance levels, right? So now we can see that price has come to test this breakout where price broke out earlier on, and now it's moving to the upside. So instead of it to hit back down, it did not do that. It's going back up. So we can say that we are going to take a position here. We set our stop loss beneath it and continue to draw it all the way up. Now remember, when we're viewing on a monthly time frame, this is what we saw, right? So we are targeting price to come all the way up here. Now for every resistance level that we have in the market, we are going to make it our take profit level. So we have a resistance here, which is 1, and then we have another one here. So in these levels, what are we going to do? What are we going to do? We are going to call them take profit. Okay. Now at these levels is where, while we are in the trade and price continues to go up, we will lock in our profit. So in whatever direction the price decides to move, it will not affect our profit. So now, having identified our take profit levels, we are going to set our stop loss. Okay, so this area is our stop loss. Now, what is our stop loss? Our stop loss is where if price goes against our trade, right? If price should go against our trade, if our analysis doesn't play through, if it doesn't go up and instead it goes down. Now, if price trades below this level, then automatically the trade stops. All right. But this is a very high probability setup that we can bank on. And now we're also going to look at what happened on Friday with the news events. Okay, now we have the the USD, NFP news, and the data that came out supports our analysis that says that GBPUSD is about to buy, is about to go long. All right, so now we have the average earnings, which tells us that actual greater than good, actual greater than forecast is good for the currency. Now we have the actual data here, and then we have the forecast here, which is 0.3%, 0.3%, which is actually the same. So not much of a discrepancy. So now let's look at the non-farm employment change, and tells us that actual greater than the forecast is good for the currency. Meanwhile, what we have here is the actual is 151k and the forecast is 159k, which tells us that it's bad for the United States dollar, right? So this is going to affect the value of the dollar in the market, and it's telling us that the value of the United States dollar is about to fall. Okay, the same thing here. We have actual less than forecast is good for the currency, but the actual here 4.1% is greater than 4.0%. All right, that gives us even stronger backing to let us know that the United States dollar value is about to crash drastically. Okay, so now moving on back to the chart, we can take a long trade all the way up here, making a whole lot of money. Okay, now bear in mind that this trade that we are going to take, it's not a trade that you expect to take your profits in one day. Now we are taking a swing trade. A swing trade is a trade that we take and we hold that position for a long period of time. And I'm talking about weeks or even months. So now if you have what it takes to take this trade and that you're going to be able to hold it for weeks or up to a month to take your profits, then this trade is for you. Now, I hope I've been able to convince you and not convince you that this is a good time to enter the market. And if by any chance you have any questions and you need more explaining or you need to understand something clearly, feel free to reach out to me. Thank you for taking the time to watch this video.